Hello everyone, today we are going to discuss on the topic ITR 1 Basics. In practical scenario, there is a myth that higher the deductions, the higher the refund. However, in reality, the higher the deductions, the higher the chances of notice. Recently, we have seen department issuing notices to taxpayers for the financial year 21-22. Further, the notices are being issued by the automated systems. Hence, the chances of receiving the notice are higher. Another myth is that the entire salary is taxable. However, the taxability of salary depends upon the various factors. 1. Nature of employment. The taxability of salary depends upon whether you are a government or non-government or a pensioner. For example, entertainment allowance is exempted in case of government employees and taxable in case of private employees. Nature of income. Certain incomes under the head salary are straight exempted. For example, gratuity. It is exempted subject to the limits. Tax regime. The tax liability is also depends on whether you opted for a new tax regime or an old tax regime. Deductions. Deductions under section 16 and chapter 6A deductions helps us to reduce the tax liability, which will be explained in the next slides. For example, take an example of Mr. Ram. The payslip of Ram is as follows. Basic 5,20,000, LTA 50,000, food coupons 24,000, HRA 2,40,000, other allowances 1 lakh, and EPF 62,400. The total income is 9,34,000 and the total amount deducted is 62,400. Now Mr. Ram has two options. 1. To make a proper disclosure and file the return. 2. Make an improper disclosure. If Ram chooses to make a proper disclosure, the disclosure would be as follows. Basic 5,20,000, which is taxable. Perquisites LTA, it is exempted to the extent of actual incurred, and food coupons, it is exempted as per the limits. Allowances HRA. HRA is exempted as per the limits and other allowances are fully taxable. Then comes deductions. Deductions under section 16. Standard deduction of 50,000 plus professional tax of 2,400. Now the total income would be 6,19,600. Out of the above, 62,400 is qualified as deduction under section 80C. Further, we assume 87,600 is also eligible for deduction, thereby total income is 4,69,000 and the tax payable shall be nil since the total income is less than 5 lakh. It may be noted that the allowances mentioned here are just an example. Likewise, there are many other expenses like internet bill, relocation expenses, books and journals, the taxability of which are depend upon various factors. It is always advisable to consult your tax consultant before filing an ITR. The disclosure of exempted allowance in the portal will be as follows. Now, if Ram chooses to make an improper disclosure, then the disclosure will be as follows. Total gross salary will be 9,34,000 less standard deduction of 50,000 less deduction under section 80C and 80D would be 1,50,000 plus 75,000. Thereby total income is 6,59,000 and the tax payable shall be 44,300 rupees. Here Mr. Ram has not provided bifurcation of salary and disclosed gross salary. Claimant deduction under section 80C and 80D on ad hoc basis, resulting in tax liability of 20,300. Resulting in tax liability of 44,300. The tax liability of Mr. Ram is also depends upon whether he chooses old regime or a new regime. If he opts for old regime, then the tax liability would be 0. However, the tax liability under new regime would be 25,438 rupees. Also, whenever we are claiming deductions under chapter 6A, the deduction should be accompanied by the evidence. Under section 80C, there is a list of payments which are available for deductions. For example, life insurance payments, EPF, term deposits, principal payment of house loan and many other. All these should be accompanied by proper evidence. Section 80D. The deduction in respect of health insurance for self, spouse, children and for parents. Section 80G. Deduction in respect of donations. Section 80U. Deduction in respect of disability. Again, for section 80D, 80G and 80U, the deduction shall be accompanied with the proper evidence. Section 80GG. Rent. If you are claiming HRA, then you are not eligible for claiming rent. Till now, we have seen the practical scenario. Now let us see tax complaints. ITR is applicable to the individuals who are having salary income, house property income, income from other source and total income less than 50 lakhs. The following persons are not eligible to file ITR. Income exceeding 50 lakh, income from PGBB, capital gains, having income from more than one house property. Income under salary head can be bifurcated into the following: basic plus DA, allowances, perquisites, deductions. Allowances are the cash payments made by the employer to the employee to cover certain expenses. Perquisites are the benefits or the facilities provided by the employer to the employee. Allowances can be fully taxable or partially taxable or fully exempt. The following are examples of allowances. Fully taxable. If you are in the receipt of the following allowances, then they are fully taxable. Generally, these are given to cover the cost of living. Partially taxable has two parts. One, in the performance of the duties and in meeting personal expenses. All these expenses are exempted as per the limit. Fully exempt. These allowances are fully exempt. If you are in receipt of the following perquisites, then they are either fully taxable or fully exempted. In case of LTA, the exemption is available to the extent to actually incurred. For example, I have received an LTA of 30,000. However, I have incurred expenditure to the extent of 20,000. So the balance of 10,000 is taxable. It may be noted that medical facility is a perquisite which is tax free but not the medical allowances. If you are in receipt of the medical allowance, they are fully taxable but not the medical facility. The valuation of these perquisites shall be based on the valuation rules as per the Income Tax Act. The following deductions are available under the salary head. 1. Standard deduction of 50,000 or salary whichever is lower. Entertainment allowance as per the limits. Professional tax 150 or 200 per month as the case may be. Fourth one. Under new tax regime, these deductions are not available. Conclusion. Filing an ITR is a sign of financial stability and credibility. Whenever we are applying for a loan, it helps to ease the process. Filing an ITR on time and with proper disclosures helps us to get higher refunds and avoids litigations.